Okay, there we go. Sorted at long
Finally
last.
get to, finally get to speak, yeah,
Oh yes.
and see each other as well, yeah.
Yeah, no, this is really exciting for me. I was really excited about this podcast because I've personally been watching your YouTube for the last 2 years plus. I've
Two
watched
two
almost all of
years.
your videos. Yeah.
That's a lot of videos and watch time. I have to thank you for then,
Yeah, yeah,
yeah.
definitely. And to be honest, because there's I've always been interested in real estate. Um, and there was nobody in Ireland in particular that I could kind of go to get information on Ireland. Usually, all the information I learned and the books I read was all about America and the UK, so I didn't really know anything about Ireland. I just assumed that the rules could just apply here. You could take all the rules in America and bring them over to Ireland, and automatically, you can start real estate. But it's the complete opposite.
Yeah,
Um, if anything, it's actually rather difficult for real estate in Ireland. But we'll get into all of that. Um,
yeah. But
I
that
think,
that actually was one of the reasons why I decided to start the channel was because I started to get lots of questions and comparisons about the US and the UK, and I started putting out videos just to try to clarify that Ireland's not the same,
yeah,
and it then morphed into something else completely. Like, yeah,
okay. So just to start the podcast, welcome everybody. Welcome to episode 8 of the Paradigm Shift. And as you know, everyone, on the podcast, we talk about how a moment in time can make or break people. We talk about the people that it made. And today we are graced by one of the largest, or the largest voice in real estate, in my opinion, in Ireland, that gives the most value on real estate in Ireland, Shane Fleming. So, welcome.
thank you, thank you very much for having me. I don't know if I'm the largest voice, to be honest with you, but yeah, like there's not many people out there, so it's not kind of hard to stand above the parapet in terms of particularly in terms of a person who's working in real estate and
Yeah.
that has a channel. Yeah.
Okay. So, we'll get right into it by if you could tell us a little bit about yourself and how you got started in real estate.
Um, I suppose my name is Shane Fleming. I've been involved in real estate for I think about 20 something odd years, working in real estate for about 18 years, but I went and did a degree in property economics, starting in 2001, 4 year degree in DIT, and came out. And after my degree, I worked for Tesco, the supermarket company, went straight into their retail or straight into their property department. I was involved in acquisitions, rent reviews, developments, planning permissions, from shopping centres to one-off boxes to petrol stations. Was there for 4 years or so. Learned a huge amount about the Irish market there. And I also went and worked for a company called IBRC, which was the amalgamation of Anglo Bank and Nationwide, which I learned a huge amount about property and due diligence and what not to do in property, particularly learning from all the mistakes that some people had made before the crash, and particularly what mistakes banks and lenders had made and what some developers had made as well. I went on and then worked for a company called JLL, which are one of the biggest real estate companies in the world, within their Dublin office, and I worked with some big companies there like Blackstone, and I also did. I worked there for about 3 years, I think, just over 3 years. But I started out my own in 2016, and I've been working kind of mainly as on the consultancy side with developers, investors, companies like McDonald's and Circle K, and I've even kind of helped out a beer brand called Whiplash get set up as well. So like my clients range from multinational companies to small investors. And a few years ago, I decided to get more active in social media, and I started my YouTube channel when I set up my property company, but I never really posted anything on it. And it was
Mm.
only really about 2 years, 2.5 years ago, when COVID kind of just before COVID, it was actually before COVID, I made the decision I was going to start putting videos out more. And COVID happened, and it just gave me even more time to put more and more videos out. and
Yeah.
the YouTube channel has grown, and that's given me more opportunities and maybe given me a paradigm shift in terms of my future as well. Yeah.
Yeah, 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 yeah. No, the YouTube is like, I'd say ha now at this stage, how much of your like new business would have came through the social media since you started social media, or would it have came from word of mouth?
My business is pretty much has been word of mouth, nearly from day one. Like I picked up most of my clients from word of mouth. The commercial property sector is reasonably small in Ireland. It's not massive. There's not a massive amount of people working in it. And I had already worked in the industry for kind of 12 years or something like that, or maybe not 12 years, but at least 10 years in the industry. So I had a lot of kind of connections already when I went out on my own. And it was word of mouth that once people knew I was on my own, some people contacted me asking for different stuff. The YouTube channel has brought in lots and lots of inquiries. It's not always the type of business I want to take on.
Yeah.
And I've kind of shifted some of, because a lot of my work is consultancy side of stuff. I did have sales and lettings side of my business, but at the start of this year, I decided to kind of shift and move away from that. So a lot of the leads that might come in from that, I'm kind of passing them on to the different agents and stuff like that, and haven't really capitalized on that in terms of the audience and the volume of people that are there who do reach out to me. And it is an opportunity for me perhaps to work with other agents from a referral basis or something else, because it's not really it's not really what I want to be doing. But it has opened up opportunities for me in different ways that I wouldn't have kind of had without it.
Okay. That's really interesting. Because I'm just thinking now, if you would have started the YouTube, if COVID never happened, and you would have started the YouTube way when you said you were going to start, I can only imagine how big it would have been right now at this stage. You know,
Yeah,
does that ever come across your
it
mind?
it does, because I click into my YouTube and I look at the details of my channel, and it's set up in 2016, and I
Yeah,
did nothing with it. I might have put out one or two videos, but really did
yeah,
very little with it. And it was only a conscious decision. I actually happened to be, I was in Brazil, December, I think December of 2019. I was there with my now wife and one of my good friends, and we were out there for like a week or so, but we were deciding to kind of set goals for 2020 while we were there, and we were kind of helping each other set goals for the next year. And I decided to put down as one of my goals was I'm going to try create at least one or two videos a month for my YouTube channel and just see what happens. Like,
yeah,
is it what Gary Vee talks about? It is it all going to generate huge amount of leads and all this kind of
yeah,
stuff? I was
yeah,
like,
yeah.
I'm sick of hearing this from the American sort of stuff that you have to do it and you have to do it. So like, look, I'll give it a year. I'll see what happens. I'll put out one, maybe two videos a month, and take from there. And then it did actually, COVID did probably change it. Probably more and more people were watching YouTube because of COVID. Not that I was putting out more and more videos than I had
Yeah.
planned to, but COVID changed it in terms of more and more people were at home, more important people were on YouTube. And that definitely had an impact in terms of early stages, in terms of numbers and people actually getting involved and watching the videos.
Okay, right, that makes a lot of sense. I'm just thinking now, because there's a lot of stuff. Because I remember I sent you a good list of things that I'd like to talk about today, and I don't know how much time you have in particular. So, um, on the next segment, I'd like to talk about, because I want to go into like the New World Order, all that other stuff, and in terms of real estate, because that is something that I'm really interested in. I'm gonna keep that one for the end. But the second one I have here is on the paradigm shift. We talk about how a moment in time can make or break you. What was that moment in time for you that led you to where you are today? Is there any time in particular that pops up that comes into mind?
Um, I suppose, kind of as we're talking about this and chatting about this, and the name of your podcast kind of puts me in the situation where I am right now. Like I am
Okay.
I'm changing a lot of what I'm doing this year. As I said, kind of I moved away from the sales and letting side of my business. I kind of got rid of that at the start of the year. So I'm making that kind of change and shift right now in terms of my future. I've done 20 years in real estate. I'm planning to do another 20 years in real estate or more. But I think my next 20 years are going to be a lot different than what I've done in the past. And it's trying to find and move towards a direction where I'm trying to kind of, um, I suppose, use my experience within real estate and the knowledge that I have, but and trying to kind of create a tech or not create tech, but try use tech to my advantage in terms of bringing more and more people into real estate by using technology to help more and more investors get involved in real estate. And it's something that perhaps the YouTube channel has opened my eyes up to in
Mm,
regards to that there is a huge amount of people out there who still want to invest in real estate or still perhaps want to learn about investing in real estate. And I feel that there's an opportunity there, not on the educational side of things. It's not. I tried to do that. I did it once for a group of people. It's not really. I really enjoyed what I did, but I don't think it's my long term kind of a goal. It
yeah,
would be in the educational side of things. But what I've kind of found is there's a huge amount of people who do want to get involved in real estate, and they might have a small bit of capital, but the real estate market has shifted massively in the last kind of 10 years or so. And I think getting involved in real estate is a lot more complex than people think, and
mm,
it's getting harder and harder. So I want to make it easier for people to invest by using blockchain technology for allowing them invest or get involved in real estate, but having someone professionally manage it for them on that kind of scale and getting multiple investors involved using blockchain technology and helping them or managing portfolios on that basis. So people don't have to get involved in the nitty gritty of the management side of things, but they get all the benefits from leveraging in terms of loans. They get all the capital appreciation as well. So I'm trying to kind of get to that point. And what I've kind of discovered is it's not as easy as I thought it would be. The technology side of stuff is there. The legislation side of stuff is quite difficult and a
mm,
massive hurdle to get over in terms of you're trying to bring investors involved with some of these kind of things. It's quite difficult. But
okay.
I feel that we're on the cusp of kind of the technology regulation changes that is going to make the industry a lot different in kind of 5 years or so. And I kind of feel that now is the time to start shifting towards that.
Okay. So in terms of that, because the second you said that, the thing that came across my head was, I know there's something called property bridges, but and I think that's like an entry way for small investors to invest and try and get some return on their money.
Yeah.
And but what you're kind of talking about is more like a REIT, real estate investment trust, right?
It's a little bit like a REIT.
Yeah.
It would be similar to a REIT. The difficulties with REITs, particularly in Ireland, is like they've all pretty much failed, bar one of them really,
Okay.
because the legislation and the compliance that goes around them is quite strict. It's very costly to set up. You'd need to be kind of going, well, we have 5, 10 million here to set this up, to set up the management structure, to set up the legal compliance, and to get it listed would cost you about 5 to 10 million. So it's not an easy process for anyone to do, and that's before you've kind of raised any money from a
Yeah.
REIT's point of view in Ireland. Property bridges is a little bit different. Property bridges kind of acts as a lending service, and it's more like crowdfunding.
It's
So the
bridging
legislation
loans.
is, yeah, the legislation is a little bit different. So where property bridges allows people to get some exposure to the property market, they're generally their returns are guaranteed in terms of like 7% or whatever
Mm,
it might be attached to a property. The risk is if the developer doesn't follow through, but there is some sort of asset there underneath securing the loan. But they're never going to benefit from, I suppose, they're never going to benefit from like a really big increase in value over a
mm,
period of time because all they're guaranteed back is the percentage on their loan.
okay.
Whereas what I'm trying to do is give people the ability to invest in a type of fund that would allow people to benefit over a course of maybe say 7 to 10 years. It's a long-term investment. You apply leveraging within that product, which gives the best value, or gets the best return. Because if you can leverage up a property over a few years and let the rent pay back the mortgage or the loan on that property, ultimately then you have used the property to pay it back, and the investors who may have put in the initial capital will get all the benefits of that leveraging as well. And by building in the blockchain element, you allow it to be easier managed from an investment side of things as well. And perhaps you can build in some liquidity elements of it too. But the legislation and the regulations around it are extremely hard
Yeah.
to get your head around. It's not easy, and it's not cheap. Um, so trying to find a route to market is
Mhm.
is the challenge at the moment, to make sure
Okay.
you set it up and you're compliant to actually bring people's or get people's money into the fund.
Right. See, when I think about REITs in other countries like America and stuff like that, the thing I think about is if a rich business owner has 5 or 10 million that he just has relaxing there, you know, kind of to do whatever he wants with, he can kind of go and put it into one of those trusts or and it'll just be developing for him. But I think the smaller scale things, like the more things trickle down, the more difficult it is, the harder the barrier for entry is. It's easy for someone that has 5, 10 million, but someone that only has 5 grand, you know, like I feel like there's more things that are kind of blocking and hindering people on the lower level to kind of get
Well,
entry.
that that's the legislation that I'm talking about. That it's
Yeah,
far harder. You could set up one of these funds and target credited investors that have that 5-10 million to spend, and let it sit there for 5-7 years or 10 years. It's the legislation around that is actually far easier,
yeah,
and it's easier to bring those people in. And if anyone is investing over in Ireland, if anyone's investing over 100 grand, they're a accredited investor, and the legislations and the rules around that are far easier to actually get it set up and get it operating. But if
mm,
you are bringing in retail investors, like say someone who wants to put in 5 grand or 10 grand, the legislation around that are quite complex, and you have to make sure that um, those investors are protected. And it's kind of like a double-edged sword. The legislation is there to protect the people who may not have all the money,
yeah,
and it's there to protect them, to make sure that they don't get swindled out of their money. But
mm,
at the same time, it means that opportunities like investing in commercial real estate are locked off to them,
yeah,
and they don't get the ability to get the exposure to it. You can create a fund that allows retail investors to come in. However, the rules and regulations around it are much more strict. There's more reporting requirements. There's a lot of requirements around advertising to get investors involved. And it basically means that it's twice as hard to manage
yeah,
because there's twice as much work to do. But I ultimately think there's an opportunity, there's a need for it, there's a demand for it out there. And it just it's kind of strange because, as I said, it's a double-edged sword, because the rules are there to protect people, to make sure they
yeah,
don't get swindled out of money, and make sure they don't put too much money into an investment that they can't afford. But because it's a double-edged sword, they can't get access to it. So
yeah.
that causes problems, I think, for people who are not able to grow wealth using real estate, and they might be locked out of the market for a long, long time.
That's interesting. I think people should be let to make mistakes because they don't do anything in terms of people gambling. People do crazy gambling, there's nothing. But when it comes to something else that could potentially develop you, it's like, oh no, we need to protect you from this. Why not ban gambling then? You know, if,
Yeah,
if you really think about it, it's like, no, we can't let you have that information. Let's withhold that from you. And you can have this info, but this here, you can't handle it.
yeah, and it's kind of crazy. Like even there's talk about, like, in terms of making some of the crypto assets and the crypto coins more of a security based kind of investment. So people are locked out of those type of investments, and there are countries who have limited, like I think it might be Hong Kong or someone like that, who has limited the access to cryptocurrencies to credited investors only. So people who have money and are able to make those investment calls themselves. So uh, it would be like it's like the equivalent that right now to get involved in one of these funds or get involved in commercial real estate, you have to have a net worth of 1 million plus to be
Yeah.
even to get involved whatsoever. So it does limit it, and it is you can we can talk about it in a while, but you can kind of say it's part of this great reset and new world order and all that kind of stuff. It does make it more difficult for the average person to get exposure to these type of markets, and I don't know if it's going to get any easier.
Yeah.
It probably get harder.
To be honest with you, I only see things getting more difficult because I just got married about seven or so months ago. Um,
Congrats.
thanks. And we were looking, there was so many different options that we were looking to do. We were first looking to build our own home, and I was trying to buy land and then build a house on it gradually, put a mobile home on it, etc. For and make sure that could be like a 5 or 6 year process. And then that was basically thrown out of the way because I grew up in the countryside, and because of I think what's it called again, where you can only buy land where you grew up or where you've
Hmm.
been for the last 10 years. So I didn't want to buy land out there. I wanted to buy something that was kind of closer to Dublin and build on that. But clearly you can't do that. I forgot what the name of it. I can't remember the name of the law that they have.
Yeah,
But
it's a local planning law. So basically,
yeah,
you have to be indigenous or resident of or essential to the community.
yeah,
It's basically was set up in rural communities. So people who were like the sons or daughters of farmers that they could get planning permission to build on
yeah,
the farm and have a home there. The real reason that they kind of uh, they don't want these one-off homes, which
mm,
is understandable. Like back in the 70s or so, there was a thing called ribbon development where just all these one-off homes were popping up everywhere all over Ireland.
mm,
And it caused major issues from one a sustainability point of view because you you then have to provide storage networks, you then have to provide telephones, power lines to all of these one-off homes that are dotted
mm,
everywhere, and that causes major issues for councils to try support that. Then they have to collect the waste, they have to do everything. Then kids are far away from schools, so there is an issue from a sustainability point of view to allow one-off homes. So
mm,
they decided to just stop allowing one-off homes, but they had to bring in a rule going, well, if it's your farmland or something else and you've lived in the area all your life and you want to live beside your parents for whatever reason, you're allowed to build.
yeah,
There's been an action against or people have brought that kind of a case against the or to the European courts of appeal, and they won. That basically said that that's kind of I don't know what the word would be, but it's you're kind of you're kind of being what would you how would you call it? You're basically picking and choosing only locals that can actually build, and you're
yeah,
discriminating. Yeah, the word is you're discriminating against every other person in Ireland, but also every other person in Europe,
yeah,
because yeah, because Ireland are part of Europe, so therefore this rule should, if you want to buy a house or build something, whatever the rules should apply equally across Europe rather than just one town or village that they can make up their own rules for planning. So they brought this anti-discrimination case against the towns and councils in Ireland, and they won. And basically, what's happening is rather than the councils going, okay, well, fine, you've won, we'll allow you build, which was never going to happen. They're just going, okay, fine, we're not going to let anyone build now. So
yeah,
you've ruined it for everyone. Like you've ruined it
yeah.
for all the locals as well. So it's that's going to be an issue, I think, down the road too.
Definitely. And that was one of the issues we had at the beginning. Then we said, okay, cool. What we're going to do first is, okay, we won't build a house. We're just going to buy a house, and then we'll see what happens after that. And then the property prices basically just soared. And in we personally didn't really want to, we didn't want to buy a house first. We kind of wanted to try and get our first investment property, and then maybe later on we can get a house. Um, but because we wanted to be a little bit more malleable, and so we're currently sharing our apartment with another couple.
Okay. Okay.
So I think that's probably the best thing that I would advise younger couples to do is to share until everyone could save enough money to go their separate ways. And I think doing that, um, we then run into another hurdle that we need to get an investment property. You need 30% in cash to put down on a property. So if we wanted to get a property that was 100 grand, which you'll never find in Dublin, you need to put 30 grand down. But if we're looking at the average price is 500 grand, we need to put, 30% of 500 grand. I don't even want to think about how much that is. It's like 150 grand.
150 grand, yeah.
Yeah, it's just crazy. So like it it almost seems as if you're an investor, we don't want you, but if you want to kind of, buy a family home and do things the way that everyone else is doing it, you know, they'll make it easy for you. So it's easy for you. There's lots of schemes and loans you can do to get your first time more home, but anything after that, I feel like there's just like so many ceilings and things that are like put on people to kind of limit you from kind of excelling in a way. Would I be right in saying that?
Um, I don't know if it's limiting how you excel, but I think it is limiting how you invest. Like, definitely,
Yeah,
yeah.
yeah,
There is, and I think it's mainly because lessons were learned from the kind of crash, that there was too much money floating around, and too many people got bought up too many homes. Like, they were buying far too many homes than were needed, and they were making money at the start because the values were going up.
yeah.
So banks were willing to lend, and on the basis that, yeah, here, have 100% of a mortgage, because in 2 years' time the property is going to be worth 20% more anyway.
Mm,
And that's what was happening, and banks took a major hit on that. They're still watching through some of the properties that are that were, like, we're 15 years later and we're still washing through some of those properties that are coming up on auction sites now with receivers, because it's taken that long to get them all kind of in charge by the receiver, get all the legals done, and eventually put them on the market, because it wasn't an easy job for the bank. So they don't want to get really that involved with them again.
yeah.
And there's only a few lenders out there that will get involved in particularly residential loans. And
Mm,
the reason they look for 70%, or they look to a loan to value ratio of 70%, and look for deposits of 30%, one, that is kind of some guidance from the central bank, but also to protect themselves, that if
mm,
anything ever happens, that there is at least a decent equity in the house for the bank, that if they need to repossess it. Repossessing a property that's an investment loan is now much easier than it would be from a family home point of view. So the banks are aware of that too,
mm,
in regards to how they loan, and what interest rates they apply. So it's a different type of a market, and it's a different type of lender.
mm.
So they don't look at them equally.
Okay.
But if you are buying a home and you are trying to, like, be an investment as well. Like, I've put out videos on kind of the thing, what the term that they call house hacking, where you buy a home
Mm,
where you have an extra room to rent out while you're there. In Ireland, that's actually one of the most tax efficient things to do as well, because you can get the rent room relief of 14,000 a year.
yeah.
So it actually makes a lot of sense for a lot of couples or young people starting out in property, if they wanted to do that. I know some people who do that and then keep that as an investment property.
Mm,
They might live in it for 3 4 years, then keep that as an investment property, and buy then their second home, which is becomes their full family home as they grow.
okay. And going into speaking about the linking um, retail investors into the real estate market as a whole, would would you typically stay away from let's just say let's just go into dreamland right now. Let's say we've broken past all these government barriers, all the rules and regulations that are all kind of blocking progress, and it's an ideal scenario. Would you be investing as a fund manager um, into residential, or would it be more commercial? And then in those commercial, what type of commercial would we be focused on, or would it be kind of a large portfolio of everything?
I think right now. like what I'm looking at actually in terms of trying to get around the rules and regulations or find the most favorable rules and regulations. I spend a lot of my time in New York at the moment, so I'm looking at the models that they have over there, because they're slightly easier to set up. They're more established practices, so they're slightly easier to set up. Still come with all the rules and regulations, but buying property over there comes with certain tax benefits in terms of you can write off some of your depreciation every year in terms of the total value of the property. And you don't have such strict landlord and tenant rules from a kind of residential site. So you're protected a little bit. Granted, there has been some stuff during COVID in different states, but generally speaking, they're landlord friendly kind of jurisdictions, mostly in the US. So from buying something on a residential side, perhaps over in the US, once you got a good deal and markets come down, and there's some assets there that are worth taking. From an Irish point of view, uh, I do think values will continue to go up on the residential side, but I'd be very worried from a point of view of rental caps and how that impacts your overall value long term.
Mm.
Because if there's rental caps there from an investment point of view, you're going to end up running into issues in terms of the capital value long term. Because your asset won't appreciate as quickly as other assets would be because it's going to be capped at like 2%, and you
Yeah.
might have inflation growing far quicker. So I'd stay away from pure residential on long-term leases, but other types of residential, like short-term accommodation, hotels, that kind of stuff, there could be opportunities there. On the commercial side, it depends on the size of the value of the property.
Mm.
Generally speaking, and depends on the size of the fund as well. Generally speaking, if you are looking at smaller type of assets, kind of between the kind of million to 2 million mark, there seems to be a decent amount of investors at that kind of level. And then if you go above that, to the much higher side of things, at the kind of 20 to 50 to 100 million, there seems to be a lot of investors at that level because they're international funds or the REITs, etc., that are looking for those. And they've sewn up a lot of capital and equity, and they need to invest a lot of it. So the yields are quite compressed on those in terms of assets. But in terms of the levels, kind of between kind of 5, 10, 15 million, maybe 20 million, there's not a huge market out there for those type of assets. Or
Yeah.
the market is a little bit smaller because there's less people who have that amount of money to invest in those type of assets. So the yields can be slightly more favorable. Um, Obviously, industrial has performed really well over the last few years, but saying that, perhaps it's peaking,
Mm.
and there may not be a huge amount of growth in it. Offices is probably going to stay reasonably steady for the next few years because perhaps there'll be a little bit less development, but the need for offices is a little bit worrying. On the retail side, you have huge issues with online retail, which is going to impact retail all around the world. Ireland hasn't got a massive oversupply of retail, but other countries do. But what I'm kind of seeing from an investment point of view is, while the high streets or shopping centres might be struggling because tenants might not be paying as much of a rent, small neighborhood centers like the center that has your local shop, your barber, your hairdresser, and a few kind of like your creche or whatever, and your pharmacy. Those kind of centers seem to be still doing quite well if they're well located, and there's a lot of residential units around them, because they're not really impacted by online shopping. Like, most people still go down and buy their milk or buy
Exactly.
their groceries or go to the off license or whatever. So that's not being impacted um by online trade, and still people need to go get their hair cut, etc. So there's still a need for that, but because retail rents, or not retail rents, because retail yields have come down so much because there's less and less of an appetite for it, some of those neighborhood centers actually are very good investments based on the yields that are there, because you look at them and go, look, these are needed for the next 20 years or so because someone is going to be there or someone's going
Yeah.
to need them. So I think those are the type of investments worth going after, but they're harder to find. But there's good yields involved in them. But again, most of these you might be looking at 10 million or so to get involved in them, which limits the amount of kind of small investors who can get into it. So you do need a bit of capital to buy something like that.
Yeah. Okay. That's really interesting. And going back, you said you started your career working in acquisitions. I'm aware from watching your videos, you started off in Tesco and you started in acquisition and they threw you right into the deep end with Tesco to where you were handling jobs like that on your own. Could you go into a bit of detail then from an acquisition standpoint? Because my wife actually is doing her master's in real estate right now, and she really wants to be in acquisitions. So this would be really interesting for me to wrap my head around it, and for her, because eventually I want to be a real estate developer myself. Um, I'm an engineer right now, so I'm kind of still a good bit away from it, but eventually it would definitely be something I'd be interested in.
But yeah, well, I suppose um, to get involved in acquisitions, I suppose how I got involved in it. A lot of people when I finished college in property economics, most of them went off work for CBRE, Savills, JLL, all those type of companies, and went in as agents and were working on the kind of the selling side of things. Um, I went into a company that was very active in development, very active in acquisitions, very active in redeveloping some of their old shopping centers they had. I think or about 16, 17 shopping centers at the time, and some of them needed to be redeveloped, which meant moving around tenants or getting tenants out of some of these shopping centers to redevelop them and getting planning permission. But the acquisition side of stuff, I was involved in petrol station acquisitions. I was involved in kind of valuations for some of the other sites as well. And you get to learn a lot, particularly from an Irish point of view, with a company who is spread all over Ireland. You get to understand and drive the length and breadth of Ireland and looking for sites. It different strategies were employed in terms of how we went after sites. Generally, there was a site research department who kind of identified towns and villages that they wanted a Tesco in, and then they perhaps marked maybe 6 or 7 sites where they'd be interested in kind of maybe locating. And
Mm.
then it was our jobs or people, my colleagues' jobs to go down, find out who owned those pieces of land, or find out if we could put offers in on them, or what the planning and sectors like that. So I found that incredibly interesting, far more than just putting something up and marketing something.
Yeah.
I found that side of the business far more interesting, because you have to really get into, okay, well, will we be able to build a supermarket on this
Mhm.
site? Will we be able to get planning permission? What's the value in that area? Like, you'll have towns that, like, you'll be paying millions per acre. You'll have others that you're only paying half that. So there's a lot to be learned on the acquisition side. And I learned that very early in my career. Um, I was given a huge amount of responsibility early in my career and let go of it. Like, I was straight out of college and had a project. I had a project that I had to present to the Tesco board 6 months after I came out of college. So I had 6 months to get ready for this. But I basically was told, here's your task, and you're presenting in 6 months, and here's your team. And the team were external consultants of engineers, architects, QSs. Then you had internal design teams as well. And none of them really wanted to deal with me. But this was a project that I was tasked with, and most of these people were twice my age. But
Yeah.
I had to project manage them to get this thing done and present it. And because you're given that responsibility and you're told to go manage these people, and most of them, half of them are external consultants. It gives you, like, I think I sat at my desk looking at the list of people for about 2 weeks, trying to figure out what they do, who
Yeah.
they are, how do I talk to them, and how do I, like, I don't even know what type of questions I need to ask them.
Yeah.
Eventually, like, I spent 2 weeks trying to get everyone to agree to sit down at a boardroom to just get this done. But,
Yeah.
like, when I walk in, and most of these people have 10, 15, 20 years experience working in. There was engineers, there was architects. Most of them had like years and years experience. I'm a few days out of college, and
Yeah.
I'm ordering them around. Well, not quite ordering them around, but you're kind of giving them tasks, and
Yeah.
but once you're given that situation, or you're allowed that kind of freedom, there's a great learning curve, and I would recommend it to anyone who's coming out of college or school, that it's not just about the company you work for. It's not just about the manager or the boss. I think you have to be very careful that you take on a role that, one, gives you responsibility, but
Mm.
also you have very good leaders around you, that you're learning from very good leaders, rather than a manager who just is trying to get something done. That you're actually you have a good leader around you, and who is trying to help you on in your career, because that was very vital for me at the very start of my career.
Mm.
And I think you want to spend time with a good manager. You don't want to spend any time with a bad manager, even if it is a great company.
Yeah, I completely agree. And so after Tesco, you were, I think you started going into consulting from there, was it?
Well, I went into IBRC because the crash happened, and I went into IBRC, who were basically Anglo. So all their loans were going into NAMA, but some of their stuff wasn't going into NAMA, and I kind of became responsible for the stuff that wasn't going into NAMA and
Mm.
selling it all off. And it
Could you
was a
explain what
huge.
NAMA means, just for the people listening?
So NAMA was basically a bank that was set up in Ireland in the crash. So it was a state bank, effectively, that took all the property loans of the current banks that were operating. So they took all the loans, the property loans of Bank of Ireland, Anglo, AIB, Nationwide, and all the Irish-based banks. They took them off their balance sheet, so those banks could then go back to start being a normal bank without having these huge, massive liabilities on their balance sheet. But part of the issue was that NAMA probably underpaid for a lot of those assets. Not underpaid, but like they really kind of paid the minimum value that they
Yeah.
could to those banks. And then NAMA went off and kind of sold off those assets, either in chunks or in kind of one-off property deals, to kind of funds that came in. But it effectively was a bank set up by the state that was never going to lend, but was taking all the loans off the banks that were
Okay,
there.
grand. So then going into NAMA selling a bunch of things while you were working. I think it was
So
IBRC.
yeah, so I worked with IBRC, which was Anglo, the new name, branded name for Anglo, because they were trying to maybe keep Anglo kind of trading and operating. They did decide to kind of wind it up at one stage, but at that time when I started working for them, there was this kind of idea that they would try trade it as a bank for a period of time, and they rebranded it as IBRC. But my role was mainly in to try deal with assets or loans and assets that the bank actually had, to dispose of them. One of the ones that I had to kind of dispose of was the nationwide branch network. So that was about 80 odd branches around the country that kind of I had to go in, find out if we owned them or rented them, or what was going on with them, and then kind of eventually kind of work out all the values, decide a strategy. Should we keep them? Should we rent them out? Should we sell them? And decide, should we sell them in one lot, or should we sell them in piecemeals?
Mm.
So they were kind of like the strategies you have to work out. Going, is it better to hold on to them for a few years, sell them later, or is it better just to get rid of them now, and not take on the cost of kind of the refurb, etc.
Yeah.
And some of them had tenants in them, some of them didn't. There was other assets that were investment assets that the bank had that were eventually sold off as well. So it was the job was going to try find out what the bank actually owned it, what they
Hmm.
leased, and try get rid of everything.
Okay. And then it was JLL then after that.
Yeah, so I worked for JLL for about 3 years. Kind of It was all kind of consultancy based, with some of the larger funds and some of the receivers as well, who had
Mm.
been appointed by NAMA. So it was dealing with large commercial assets, mainly in Dublin city centre, from office blocks to shopping centres, to dealing with tenants like LinkedIn, Microsoft, all that kind of stuff that comes along with dealing with commercial real estate. But learned a bit there, but kind of decided that wasn't where I wanted to be, and I wanted to go out my own, and so went out my own.
Okay. And would you say that experience that you had when you were working with Tesco, the confidence you built working there in acquisitions and kind of, kind of been thrown on the deep end gave you the confidence to say, I'm going to go out on my own and start my own business? Because 10% of, all people are business owners. So you are a minority in that sense. So it would take like a minority way of thinking to also kind of step out.
I suppose actually, before I went into Tesco when I was in college, I always had the mindset that I was going to go out my own.
Mm.
I went into Tesco with the plan that I'd go in there for about 2 to 3 years, learn as much as I could, and then go out on my own.
Yeah.
But it was kind of 2007 period when I was kind of half thinking about this, and I kind of decided it wasn't the right opportunity to go out on my own, and I
Mm.
decided not to. Luckily, I didn't do it then. And 2008, obviously, the crash happened. So
Yeah.
I decided to hold off going out on my own at that stage. Markets weren't great here in Ireland. I looked at a few different things at that time myself, but didn't really take full steps to go out on my own at that point. But it was always a dream or always a kind of aspiration for me. I took a few jobs. The property market wasn't great. The property market started to get a little bit better. And come 2016, I was ready to kind of go out my own again, and I took the opportunity to do it at that stage. But it was always an aspiration since college to go out on my own. So it was never. I think I would have always regretted it if I had just stayed working all the time.
Yeah.
So I had it in my mind that if I didn't try, I would always regret it. And
Mm.
even if I failed, I didn't mind. I just knew that if I got to the end of my career and I'd never tried, I'd look back at that as a major failure by never trying. So
Yeah.
I had to take the opportunity when I got it.
Okay. And being a minority in the sense of people that actually choose to go out and do the things on their own, how has your worldview changed from um, the way it was 10 years ago versus the way it is now? Like what kind of, well, then again, because you did say that you always knew that you'd be going out on your own. It wasn't a decision that you made halfway through. So I guess maybe you can still answer the question in terms of like, how has your worldview changed from 10 years ago than it is than today?
Um, 10 years ago, I'm trying to think where it was 10 years ago. I suppose one of the major things in terms of how my worldview has changed or shifted over the last few years is I would have kind of always thought that the world was getting bigger and more inclusive, and boundaries were coming down all the time, and borders were coming down all the time. It was easier to have a global presence and a global kind of an identity.
Mm.
But as kind of the years have gone by and COVID, I think my worldview is kind of slightly changing on that. That it's going to get harder and harder for to cross borders or have an international kind of identity or the business, and I think it's going to get harder and harder for people to do that. I think a lot of people have been talking about inflation over the last few year or last year or two, and like the impacts of inflation that's having on our economy at the moment or the global economy. But I think a lot of people kind of forget like how one of the reasons why we had such low inflation for 30 years was because the real reason, or one of the real reasons I think we had such low inflation for years, was because uh, the global economy was opening up all the time, and more markets were getting involved. So you didn't have the supply issues weren't an issue. People were finding innovative ways. Global markets were competing with each other, and
Mm.
competition like supermarkets were competing with supermarkets. And the globe was opening up for more and more competition, and car manufacturers were competing with multiple car manufacturers all over the world. People making construction products were competing all over the world. So people were making things and keeping prices down because global competition was so strong
Yeah.
that prices were being kept down from an inflation point of view.
Okay.
And when we then got into COVID and borders started to close down and businesses had to shift around what their models were in terms of where they supply stuff from, uh, borders got tighter, and it's having a massive impact on inflation. And I don't think that while I think inflation will slow down, because it will with the interest rates and everything else, and sentiment will slow down. I do think that there will be a little bit of a slowdown from an inflation point of view, but I think that trend towards kind of borders closing down or trade barriers being set up in terms of Brexit happening, there's lots of other things that are kind of forcing more and more countries to kind of look more from a nationalist point of view. And I think that trend is going to grow and grow and grow, and that will impact how we trade with other countries, that will impact how we travel. And I think kind of that has to bear in mind in terms of kind of any future kind of businesses, in terms of construction technology,
Mm.
what we do from an investment point of view, and how that will impact our world here, or impact Ireland as well, in terms of the outlook. And I don't know if I've formed a full view of how that will impact us in years to come, but I definitely think movement and visas and everything like that are going to be very precious.
Yeah. So I was thinking the same thing because, looking towards the future, it would be a thing of like, oh, the future looks so bright. But if anything, it's kind of the opposite. And that's, like you said, the worldview has changed from 10 years ago to the way it is today. It's kind of looking a little bit bleak, only because of like all the legislation and like the things that are happening that are making it seem as if, you know, people are being kind of pulled to one side. It's like kind of have everyone thinking one way. Um, and it's almost like creativity is being killed. Um, Opportunity is also being killed, and access to information. I feel like even though before there was less information available, but now there's more information available, but to apply the information, I feel like is getting more difficult because of the legislation that's being brought out and stuff like that. So I thought that was very interesting. Um, the next one I have here is if you could start all over again in this new age climate, where we are today, and let's just say you're graduating property economics, you've just graduated, and now you're starting to look for work. What would your strategy be?
Um, I think, as I said kind of before, like I wouldn't be massively focused on the actual company itself. I'd be more
Yeah.
focused on the experience that it gives you, and also the leaders that are in there, or who your management might be, because
Mm.
I think management is so crucial in terms of your early development. That getting a good manager is worth its weight in gold, really, in terms of how your career can progress. I think I would be definitely looking, if I was coming out of property economics and I was looking for a role, I'd definitely be looking for perhaps a role more in prop tech than kind of agency side of stuff. I'd be looking at the prop tech companies, seeing what they're doing, seeing what kind of innovations that they might be doing. I think ultimately, I think prop tech is nowhere near where it should be. I think it has leaps and bounds to come on in terms of
Mm.
how it will interact with the real world and interact with people. I think there's huge opportunities there. I think a lot of companies, particularly in America, what I'm kind of seeing is a huge amount of kind of prop tech companies really were set up by people in Silicon Valley that perhaps didn't have any real estate experience, and they had huge access to money in terms of VC funds. And they said, like, look, we're going to solve the real estate problem here.
Yeah.
And they go off and try build something, and they wouldn't get the kind of traction within the market because they weren't getting the actual real estate professionals to buy in the first place, and therefore there was
Mm.
never getting any traction in the market. I think what's happening now, particularly in the US, is that those type of tech funds are now kind of turning to the industry first before they
Mm.
go and develop, and before they go and do things. They're turning to the industry first, getting some serious industry players to go, look, we're looking to do this, how can this help you, and how can we develop this out for you? And they're going, okay, well, we might roll that out in one of our brand new developments or brand new buildings or office blocks or whatever. And then technology is being built out in line with the industry, in line with the real estate professionals and investors. And I think that's going to lead to much more innovations within the industry in the future. And I think there's probably so many opportunities within blockchain. Like I've been looking at blockchain for probably about 12 years, never thought much of it at that
Mm,
stage. Didn't really think it was going to revolutionize the industry. I still think there's loads to go. I still think people on that side of the kind of technology side probably don't quite understand how they can adapt the technology to benefit the industry. But I think that I'm starting to see the benefits of like tokenization, NFTs, and all those smart contracts. They can be brought into things like leasing funds, commercial leases. That all these things can be perhaps tokenized, NFT'd, and there can be values placed to them. There can be certain kind of protocols put into commercial leases that perhaps trigger at certain dates or certain performances. Perhaps like might have turnover rents, or we might have like rent reviews that are all programmed into a smart contract that can
yeah,
make things or make my job irrelevant. But there's a lot of I think there's a lot of scope there. There really is a lot of scope from the technology side of things, and that's where I would look if I was starting again.
mm, that's really interesting. I think whoever cracks that code, um, I think that's going to be the next multi billionaire if
Yeah,
they can crack that.
I think there's loads of tech going into buildings. Like there's
Yeah,
loads of construction technology happening now in terms of from an engineering point of view.
yeah,
There's lots of smart stuff going into buildings. Um, I still don't think we're anywhere near solving anything from the residential sales side of stuff. I think that's
mm,
just a little bit too diluted all over the place to really kind of have a really smart solution for it. Yeah.
yeah,
But on the commercial side, I think there's huge opportunities on the commercial side to start digitizing some of these things and start digitizing everything within an office block.
very interesting. Um, if you could go, no, advice you would give to your 22-year-old self. You actually kind of answered that question by, getting into prop tech. But let's just say right now, um, not even in terms of a career, but what advice would you give to your 22-year-old self in 2022?
2022, if I was 22 or 20, I don't know. It's hard to look back and criticize yourself too much. I don't look back with huge amounts of regrets. There is things I
Mm,
would have done better if I could look at them. But I think probably one of the only things that probably I look back at and go, oh, I should have been a little bit smarter on is saving and investing more. I was lucky enough to like go into a role within property when it was booming.
yeah,
When I went in with a very low graduate salary, but that increased multiple times in my kind of 4 years, and it was a good salary when I was like 25 or 26. It was a very good salary, but the problem was when you're that age and it comes into you, you spend it as quickly as you get it, and you don't think
yeah,
about the kind of future. And I think that would be one of my kind of like lessons learned. Going, no, you need to always save a little bit of your salary all the time.
yeah,
If you're investing it somewhere safe or a little bit risky, it just needs to be going somewhere rather than just frivolously spending it all the time.
yeah,
Because at that stage, and it's a little bit different now. If I was 22 coming out of college now, maybe would be saving because you'd have seen or you'd have heard of a few crashes in COVID and
yeah,
everything else. But at that time, it was like the wave was going this way. It didn't
yeah,
look like it would ever go that way. So you're like, yeah, and you were also offered 100% mortgages and 100% investment deals.
yeah,
So like you're like, why do I need to save when I can get 100% mortgage? So you're like,
yeah.
I don't need to save anything.
Crazy.
So that's probably one of the lessons that I would have learned from then. I
Yeah.
hopefully 22-year-olds are a little bit smarter now.
Yeah, I beg to differ because I'm because I'm 22 right now, and from what I see, it's fairly wild out here as well.
Yeah.
Um, in terms of just lack of education, I think that's just ultimately what it is. Everybody wants to be rich, but nobody wants to do anything long enough to get rich. It's
Well, that's probably like a piece of advice that like not that I thought about it, but like time flies, and like I
yeah,
think if I think about back to my time when I left college, like if I was to save like those 20 years, like
Mm.
yeah, there'd be much different. And I think that 20 years, like you can really build something if you build something slowly, like and I think you don't need to rush into being a millionaire or trying to be a millionaire. I think by rushing into these kind of things, you end up just getting sidetracked and going
Yeah.
different directions, and you never really make a kind of a good kind of career for yourself.
Mm.
So I think kind of like you focus on the long term vision rather than the
Yeah.
kind of short term gain.
Yeah. I think, look, where a lot of older people call us the microwave generation, where we want things quickly, but the old generation are more like an oven. You know, they're cooked from the inside out, but microwave, it's only on the outside that's cooked, not the
Uh,
inside.
like I would kind of probably say to you that's every generation, every 21
Right.
year old, 22 year, like it's actually in your DNA and your psyche not to think of the future
Yeah.
or not plan for the future till you get to about 25, 27. So
Okay.
it's not that you're actually doing anything wrong. It's actually
Mm.
your just mind is not built like that. You're not, and to be this is probably a bad analogy of it, but like that's why like the they pick 18-year-old soldiers and 19-year-old soldiers because they
Mm.
don't think about the consequences. They don't think about their actions. When you don't see many 29, 30-year-old soldiers signing up because they go, well, the consequences of this are like life changing.
Yeah.
But the 18-year-olds don't think about that because your brain is not actually geared to think about the future or think about a pension or think about investing. So it's not actually that you're doing that wrong. It's just that
Mm.
your brain's not wired that way. You know, for whatever reason in our history or genomes or whatever, it's just not wired that way.
Interesting. Okay. Um, the next one I have to touch on here is the Irish property market and why it's so difficult. Because I know you had a video that 100,000 homes, the plan for it was just redacted recently. Was that recent or did that happen a while ago?
Well,
Can we
it's
touch on that?
yeah. So effectively, what councils do all around Ireland is they create a development plan, and those development plans come out kind of generally every 7 years. And what they do is they put land out and they'll go, okay, well, this is for office development, this is for industrial development, this is for housing development. And they'll zone all the different types of land and different types of parcels of land within their county council. And every county council will kind of pull them all together. So there will be one for the whole country, but generally it will be in each county council's kind of remit to decide what actually happens. And what has happened in kind of recent years is that the amount of available land has been reduced in like around Dublin and the greater Dublin area in terms of the amount of land that's available to be developed for residential use because certain kind of guidelines have come in regards to what you should be forecasting or what you should be allowed forecasting within that kind of area or that time scale.
Mm.
And it has meant that there will be lots of land available to be zoned and built in smaller kind of rural areas in terms of like kind of where places where people don't really want to build or live at the moment,
Yeah.
and that's the problem because where people actually want to build and live is in Dublin, but
Hmm.
there's going to be a huge lack of available sites for people to do that over the next kind of 20 years because of these development plans and because of this kind of national strategy overall in terms of where development happens. And the idea, one of the fundamental issues is the idea is that development should be spread throughout Ireland and there should be equal development throughout Ireland over the next kind of 20 years as part of a kind of an overall strategy for the country. And that means that places like Cork or Galway might be able to grow by like 50%, but places like Dublin might only be able to grow by 20%. So, because they want it to balance.
Yeah.
But it's never worked in Ireland. They've had these plans for like 20 odd years for national growth. Ireland, in my mind, is too small for that type of growth. Like
Mm.
Dublin is still a very small city. The
Really
city
small.
needs to compete. The city needs to compete on an international kind of scale to create jobs and generate jobs for the city and for the country.
Mm,
We can't spread that out over an entire country. It's just not possible. No country does that, and it's not sustainable in my mind either. Like they had a thing called decentralization years ago from the government, because all the government departments were focused on Dublin. They had most of their kind of offices were in Dublin, and they decided to do decentralization, and it didn't really work because they wanted to like put like the IDA down in Athlone, and they had to move departments all over the place to try create like to spread employment of the government around the country.
yeah.
But the hope was that then those places would have more and more jobs. But realistically, people want to live in Dublin for a number of different reasons. There's schools, there's colleges, there's hospitals. People want to live near those type of
Mm,
facilities. Most of the time, in terms of general population, and by trying to spread it all out, it just doesn't work in my mind.
okay. And in terms of like the housing crisis that we're going through right now, and from I've been seeing a lot of the demonization of landlords in particular, like, and even on the news, landlords are being seen as like these slum lord criminals, piece of like the worst type of human beings that exist, even though they're just fulfilling a need. And like, if there's no landlords, then who the government's going to be your landlord. There's always going to be a landlord if you don't own, you know. And
Yeah.
it's just really confusing me. Like the narrative right now is shifting to where it almost seems as though, correct me if I'm wrong, it almost seems as though the government is allowing people to look at landlords as the enemy so that they can come in and buy up all the property so then they can rent it to people themselves.
It's like I don't know if it's a strategy or if it's a consequence,
Yeah.
or if it's there's a greater plan. It would seem like from the kind of the Great Reset and kind of the World Economic Forum, it would see that this trend is not just Ireland. This trend seems to be in a lot of developed countries all over the world, where it's getting harder and harder for small landlords. The
Mm,
landlord options that are kind of available are the REITs who are happy to have £1 billion or £2 billion of assets in one location, and then government funded housing, and it seems to be one way or the other. And owning a home is getting harder and harder, and getting and becoming a small landlord is getting harder and harder as well, from a
yeah.
tax reason, from a legislation reason, from now a media and press thing as well.
Yeah.
Landlords are villainized, and they're being villainized all over the world. And it seems that this seems to be a trend within the media. It seems to be a trend within government, and you just worry about the future in terms of what will happen to people's ability to own their own home. Will your only option be housing, which I don't want to go into, and I don't think many people do, or will your option be renting off one of these REITs? And that seems to be the way that some people want to move to. That could take 20, 30 years to get to, if not longer, but it seems to be a deliberate kind of roadmap for a lot of countries. And it is a little bit of worrying in terms of the stripping of property rights,
Yeah.
because property rights are important for individuals. They're important for, I suppose, it's how people have the confidence sometimes to start businesses. It's how the people can actually start businesses, get
Mm,
loans, etc. If they have property rights, without them, things get a lot harder.
yeah. Like it's very, like when I'm thinking about it, I'm not only thinking about myself for right now. I'm thinking about, okay, if I buy a home and I want to give that to my children, giving that to my children is now more difficult. It's now going to be more difficult if we keep going on this trajectory we're on. Things will become more difficult because if I die and I hand it to them and the property value is £1 million, then they have to pay that inheritance tax on it. And if they don't have that in cash, they have to sell the property. And who's going to buy the property? The government. And then what are they going to do
Yeah,
with it? They're going to rent it to somebody else. So it's almost like ownership is just, being taken from everyone as a whole. And like you said, it's not only an Irish thing, it's actually like a world thing. which ties right into the World Economic Forum. I
Mm,
think Klaus Schwab is the president of it, and in his book he said you will own nothing and be happy, and
mm.
everyone just ignored it. But how can someone say that and it says it in a book and they'll still say it's a conspiracy? Like my
Well,
brain,
like
I don't know.
I like I think the like it's not a conspiracy. The World Economic Forum have clearly said that this is the route that they feel is better for the world, better for businesses, better for governments. And there's multiple reasons why it is better for businesses, better for government. It's easier to control people if everyone is in state housing. It's easier for businesses if to supply people to rent to people if there is no homes to actually own. So it creates. It's kind of like I think the easiest way to kind of explain it is it's kind of like they've realized that one of the biggest assets in the world that has continued to grow in value has been real estate. And like obviously years and years ago, the only people who owned land were the landed gentry and kings and everything else. And it seems like they want to get back to that where they're the only type of people, not kings, but like the extremely powerful own all the land because they've seen it over the last kind of like it's not even that many generations that have had the opportunity to own their own home and create wealth for themselves. You're probably only going back one or two generations in some countries, and it's like they've kind of gone, well, we have lent as much money as we possibly can, and we're making money out of loaning. But let's go back to actually owning the real estate, or let's control the full real estate rather than just lending on the real estate. It's
Mm.
better for us to own it and control it and just rent it. And it seems that that is a strategy for some people. Why governments are buying into it, I don't know.
Mm.
Why governments are allowing themselves to be bought into it, I don't know either. And I think that's where the conspiracy element kind of comes into it because you kind of go, why? Like, why are governments allowing themselves to do this? Because you don't understand from a voter's perspective, like why would someone vote for you if this is what you're going to do?
Yeah,
And I think that's where the conspiracy element comes into it because it's hard to understand why governments are allowing themselves to actually facilitate this.
it really is. And what, how did you come to this realization yourself in terms of this on a ground level? Like, how did you see, you saw the blood in the water, it seems.
It's a kind of a strange one. It's not something I was looking for. It's not something I
Yeah.
was doing a lot of research on. I actually had heard of the Great Reset, and I actually, to be honest with you, I actually thought it was something to do with because it was like the Great Reset, and then sometimes it was followed by the greatest shift in wealth in a generation or whatever. And I thought it had something to do with cryptocurrency and
Yeah.
everyone buying into cryptocurrency. So I thought the Great Reset was something about the financial markets, and we were all going to crypto. So that's what my view was on it for probably 6, 7 months, maybe a year. I don't know. But then I came across a few kind of things in Ireland in regards to losing more of our property rights in terms of obviously we were all the landlord stuff was happening, but there was a lot of talk about CPOing commercial or CPOing vacant properties in Ireland, and legislation was drafted up about CPOing land from or CPOing vacant properties and vacant land from landowners. And I read into that. It was a very basic legislation. It didn't get passed, luckily enough, but it basically gave the government full freedom to come in and take any house, any land from anyone. It didn't have to be really vacant, just on the basis that it was in the government's best interest that they could CPO this. And like CPO is like compulsory purchase order, which basically is quite common in Ireland when you're building like roads or the port tunnel or a railway that
Yeah.
like the government need to be able to take land off people, but they pay a very fair value for that land, and generally they pay way over the top for it. So it's never been used for anything more than kind of infrastructure projects. But to think that it was going to be started to be rolled out on a massive scale to take vacant properties or any property. And I started getting concerned, going, what happens if you're one individual who perhaps might be in his like 60s, 70s, 80s, 90s and had a family home, four-bed family home, but his family's all moved on or gone or passed away, but they're still living in that home.
Mm.
Does the government turn around and go, well, actually, we're going to CPO your land or your house, your four-bedroom house, and give it to rent it to a family now because you don't need it anymore. You're only one person. Like, and the legislation was that broad that it didn't get passed, but it could have allowed the government that type of freedom. And I found that was very concerning. And then when I started to kind of like look into it more and more, the Great Reset started to pop up, and I was like, oh, I need to read into this because this is maybe perhaps linked. And eventually, I was like, well, actually, everything here is being mirrored, like in terms of what's happening in Ireland, in terms of property rights being stripped. It's happening in other countries as well. I put out one video on it, and the amount of comments that I got back on it, going, "This is happening in our country. This is happening in our country." I did another video, same thing happened again. Lots of people reaching out from different places all over the world saying this is happening to us as well in our country too. Like, so it does seem to be like, if you think about these rules or regulations coming in to reduce property rights, like if they were 10 years apart,
Mm.
like fair enough.
Yeah.
Like sometimes like marriage equality or gay rights or whatever it is, like they can happen like over a period or maybe kind of 10 years as countries kind of develop their different kind of agendas and stuff like that and move one direction. But like to see this happening across the world where people are losing their property rights over the last kind of year or two, and it seems to be
Yeah.
very much deliberate, it's kind of go, well, there's something else going on. I don't know what that is, but
Yeah.
like it just seems too obvious not to be conspiracy, to be honest
Yeah,
with you.
like it seems like a coordinated attack almost,
Yeah,
because
yeah,
every
yeah,
country has its own issues. Netherlands is going through that big thing about the farmers right now, even though the farmers in the Netherlands are one of the most efficient farmers in the whole world. They're being
mm.
attacked in that specific area, but I think it's so that the government could come in and buy up their land and turn that into whatever they want to turn it into.
Well, like actually, one of the more concerning ones was in Ukraine,
Yeah.
which I didn't realize. But when I kind of started doing this research that was in Ukraine was Ukraine needed some money back 2 or 3 years ago. They needed some money, and the IMF were going to loan them some money. But I think it was about 10 billion that they were going to lend them, or something along those lines. But part of the loan agreement of that was that they would change their rules, their legislation, to allow farmland, to be bought and owned by foreigners and by foreign companies, which hadn't been allowed before.
Mm.
So, and that happened around kind of 2000 or 2020, sorry. And you kind of go like to yourself, going, how was that like they had to pass that in their government bodies
Yeah.
to allow that rule to be happen. But it was on the basis that okay, we're getting 10 billion here, but
Yeah.
we passed this rule. And like it seems kind of innocuous at the time, maybe, but
Yeah.
like now it seems a little bit different in terms of like who's trying to control that land, who's
Yeah.
really trying to control that land,
What do they want to do with the land as well?
what do they want to do with it? Yeah.
Yeah, and that's I think Bill Gates is now the largest landowner ever. Well, no, I wouldn't say ever, but the largest landowner in America. I think he
Mm,
spent over $250 million on just farmland, you know, and he's trying to get into the agriculture space in terms of making food that's not real food, you know,
mhm.
and I don't like this. It just goes. The conspiracy would never really end. You'll just jump into a rabbit hole. Like, why does he need to own all that land? Because the land it's not on you can't really make money off land, really. Unless you're a farmer. So it's like,
Unless you're a
what do you
farmer,
need
yeah.
it for? You know, like you're just having it there just to hold it, and then to grow
Mm,
your own. Maybe you grow your own food. Well, an acre will be enough to feed you and your family. Do you want to feed everybody? Or are you trying to use it to make like vaccines or medicines or something like that, and
yeah.
it's just really interesting. And yeah.
To be honest with you, I haven't really kind of I know about it, about like about it, but I haven't really given it much thought or paid much attention to it. Like in terms of like he's worth X about a billion. So if he
Yeah,
puts a certain amount of it in land, like is it
yeah,
just a hedge against something else, or is it more detailed than that? So I haven't really given it a huge amount of thought in terms of what his end goals are
yeah.
in that regards. Yeah.
It's interesting. I think I think the ultimate goal of all of this is ultimately control. And the thing that I fear about public housing is if me, for example, if I have a big platform and I'm part of a scheme where I have to rent off the government. If I say something that they don't like, they have access to just kick me out of my home, and I could have been living there for a long time. I don't like that thought of they can just kick me out if they don't like what I say. And that's
Mm.
the kind of direction I can see things going in right now, to where people are getting cancelled for giving their opinions now. Before, everyone was entitled to their opinion, but now it's like if you have the wrong opinion, quote unquote, you know, you're no longer here, and they'll just wipe you off everything. They'll even block your bank accounts. Like it just
Yeah.
seems like it's
Well,
all connected. It's crazy.
yeah, control. Like I suppose one, if we go back like a few years, and I don't even have to go back that far, but like people didn't have a platform.
Yeah,
Majority of people didn't have a platform, so the government didn't have to worry about like
yeah,
the odd individual. You had to. Would have taken a long time to get an audience, and you'd probably have to go into government or whatever to get some sort of a platform
mm,
or be in the media. Um, so this whole new thing of other people having voices is probably a new thing for governments to kind of really consider and think about. In terms of controlling bank accounts, like I was quite shocked to see the Canadian government freeze bank accounts, and you think that would be quite a free and open market and
yeah,
open country, and for them to freeze bank accounts,
yeah,
and they froze bank accounts of truck drivers who went and protested. They froze their bank accounts. They found who they were on their license plates or found their facial recognition and froze their bank accounts like that. It's an insane thing to think that Canada did that. Like, and if
yeah.
Canada can do that, everyone can do that. Like, obviously, if you were to read that story and that was Russia or that was China, you'd go,
You
yeah,
wouldn't be
well, so
surprised.
what? They
Yeah,
do. You wouldn't be surprised. But the fact that Canada does something like that, you kind of go, oh, hold on a minute. And then you get into kind of maybe one of the real reasons why cryptocurrency and kind of non-linked kind of currency is more and more important as we go. But even that is going to be probably regulated and controlled
yeah,
by lots of different, like, because the platforms themselves, in terms of like uh, the actual blockchain technology behind them, a lot of those are now being bought up by some of the funds, and some of the funds are backed by some of the governments and
e-
so on. So eventually, like,
exactly.
they get
Yeah,
holds of all that stuff as well. So
yeah,
it is about control. It's ultimately about control. Like, I think the scarier one is about the digital currency, like, and not having cash in your hand, and like, can they control your digital currency if they start using a digital euro? Then they know exactly what you spend. You have
yeah.
a wallet. They'll know how much you spend on cigarettes, alcohol. They'll know how much you
Everything.
gamble. They'll know how much everything. And if they decide, well, actually, we don't want you to spend any more money on cigarettes this month, we're cutting your wallet off against cigarettes. So you can
Yeah,
still buy your milk, but you're not buying cigarettes. So like the freedoms can be taken away pretty quickly if everyone's using a digital wallet that can be controlled.
yeah.
If it's a digital currency, because they can all that can all be programmed. It's not hard to program all that kind of stuff in.
Hmm.
Um, so there is major concerns, I think, on that side of things. From a global point of view, there's major, and I think you are right. It's all about control. And from coming from someone who's in real estate and property, property rights are incredibly important for people to be able to control. Because if they control their own property and they can control their own home and they can control their right to their property, that gives them some power against the government. And if multiple people have that power, then they can control the government
Yeah,
because you have votes, etc. But like, if you're in state housing and you vote against the government, are you going to be kicked out of your house? Perhaps you won't be kicked out of your house, but perhaps you'll be put down the bottom of the list
yeah,
for the next house. If you like, there's plenty of examples in Russia or China where people have state housing, and they might get their first studio accommodation with their wife or girlfriend when they get state housing, but then they might have a kid and they might apply for a one bed or two bedroom apartment, and they might have a second kid and they might apply for a three-bedroom apartment, and but they can still be in that studio apartment that they've
Yeah.
got, and they could be in there with like two kids, three kids for 10, 15 years before they ever get like far enough up the list to get into a three-bed apartment. So like the idea of state housing and free state housing or even subsidized renting might seem appealing for some people, but you have to remember that's going to be ran by a government body who generally aren't that efficient. There's going to be waiting lists because it's not everyone's going to magically have a home. And like while I think state housing and social welfare is incredibly important for a country, for every country, including Ireland. And we should definitely help people who can't help themselves, and definitely have state housing. And young people starting a career should be given supports in terms of buying houses and all that. But I think there has to be a balance. There has to be a private market where people can go and buy homes. There has to
Mm.
be homes that you can go and rent, because not everyone wants to buy, particularly if you're moving around for a job or whatever. You might only want to stay in a place for a year or 2 years, or you might be a student. You might only want to stay there for a few months of the year. It's not feasible for you to buy in
Yeah.
those type of situations, and you might have to rent, and there has to be a functioning rental market. So there has to be a functioning state home market, or not market, but a functioning housing state body that runs it. There has to be a private market for private individuals who want to buy a house, and there has to be a functioning rental market, and they all work in tandem. And
Exactly.
if you start pulling one down, like you start pulling the rental market down, that has an impact on the private market in terms of people being able to buy. It has an impact on state housing because more and more people need state housing. If you pull the state housing down, more and more people need to move into the rental market or private homes, but there mightn't be enough for them there. If you pull, so it's about a balance between all three within a normal economy. But it seems like we've really messed up the balance. And we try fix the balance by trying to pull one down, so another one can go up, but it doesn't work like that. It
Yeah,
just doesn't work like that.
it really doesn't. And looking at the kind of the property market in Ireland is the main reason why I've seen so many of my friends leave the country, and so many people that I've worked with as well. Everybody's leaving Ireland, and you know, I think there's like 100 million Irish people worldwide, and there's only 5 million in the country.
That
Like,
can't be right.
I think there's actually about 100 million Irish people. If you look it up, I think it's about 100
Okay, well,
million.
well we won't do Joe Rogan here and just open it, or redo research or fact check you here. Yeah, no, there probably is like 100 million who claim to be Irish,
Okay,
who
fair.
claim to, yeah. But I don't. I think like in terms of passports, you might have about 8 million passports out there.
Yeah, okay,
On
that's
on
fair.
on top on top of the 5 million that you might have here or something like
Yeah,
that. But the 100 million is the 80 million Irish Americans who claim to be. So you have a quarter of America claiming to be Irish. Like I
yeah,
think that's where that comes from.
maybe.
But I think the figure is probably closer to about 8 million out there.
Yeah.
Which I think I know that, or maybe that number is coming in my head because there was a debate about should Irish people be allowed to, or if you hold an Irish passport, should you be allowed to vote
Mm.
in Irish elections? And they were talking about maybe the presidential election, maybe opening up
Ah,
for the presidential election, going, okay, look, not that important if people vote for it if they're not here in the country. Because, like, if you're an American citizen or Brazilian citizen who we saw here in Ireland, they all have to vote, even if they're not living in the country.
mm.
Americans need to do the same thing. But opening up from an Irish point of view, let's say Brazil open, or Brazil have it, that Brazil have, if you're living in a foreign country, you can vote. Like that might only be like 3-4% of the
Yeah.
population who are voting, so it's not going to have a major impact. Same in America, it's probably like 5-10% or 5% probably at most. So it's not going to have a major impact on terms
Mm.
of an election. But if you have Ireland, who has 5 million people here, and you have 8 million people outside of Ireland, like those 8 million people can control the future of Ireland and not even live here.
Yeah.
So
Yeah.
it becomes a little bit of an issue from that regard.
It's
Um,
funny.
but yeah, that's not really on the property side of things at
Yeah.
all. But in terms of kind of going back to people moving and people leaving, like I'm as I said, I'm in Ireland as we speak, as we're talking here, but I'm heading back to New York on Friday, not this Friday, next Friday, and I'm there 2 years now. Didn't really plan
Mm.
to go out there. It just happened. My wife was from New York, and when COVID hit, we decided to just go out there rather than being in Ireland. Um, and it turns out we both like it a little bit over there. We're not going to be there for too long. We're just going to be there for maybe another year or so.
Mm.
Uh, but I think it's really important for Irish people. It's like people have to stop giving out about Irish people leaving and that we export all our best people. It's an island. What are you meant to
Yeah.
do? Like you have to leave an island to get some experience. Like people have to stop giving out about this. I really think
Yeah.
it's like it's a real negative attitude that we have. Like on, oh yeah, you're young and we've educated you and you should stay here. Blah and all the rest that goes along with that. Like we're an island. If you really want to experience the world, you have to get off this island. It's a small
Yeah.
rock in the like in the Atlantic Ocean. Like you have to get
Oh,
off
man,
an
like
island.
that.
Like it's a big world out there. Go out and experience it. If you don't marry someone in a different country, come back here and settle here. But like if you marry someone in a different country and you stay there, fair enough. But a huge amount of the Irish actually go off for a year or two and they come back. They
Yeah.
generally come back. Like and even when COVID happened and people are all leaving after COVID or whatever, like that's a build up of 3 or 4 years of people who couldn't get off the island and need to get off the island because they'd always probably would have planned to go to Australia, Canada, or the US after college or whatever, but because we had like a year or two where no one could get off the island, like there's going to be like a boost when people can get off.
Mhm.
But what was happening actually during COVID was a huge amount of people have come back. Like a huge amount of people have moved back from America. A huge amount of people have moved back from Australia. Like a huge amount of Irish people who were doing well over in Hong Kong moved back as well. Part of the problem with the property market is a huge amount of them sold up their homes or sold up properties that they might have had in these countries, and they are coming back with a lot of cash and buying
Yeah.
properties with a lot of cash. So that had a massive impact in terms of driving prices up because there was more people coming back to Ireland than actually leaving. And people give out about all the people leaving all the time, but the actual numbers say that there's more people coming back than actually leaving.
That's really, really intriguing. Yeah. I see a lot of people leaving mainly because even though the salaries in Ireland, in comparison to other countries, are actually really good, in certain industries, not all, um, but the, trying to buy a home just makes it like not worth the good salary that you might get here,
Yeah.
you know?
Well, I think it's important to realize where people might go. Like if they go down to Portugal and they can somehow live in a tech kind of nomad or live like work from home or whatever, and they're picking up a place in Portugal or renting in Portugal for cheap or wherever else, maybe in Europe for cheap. That's fair enough. But if they're going to a major city, if they're going to London, like let's compare Dublin. Like Dublin is a major city in Ireland. But if they're going to a bigger city like London, or they're going to Canada, or they're going to the US and going to any major city or Australia or anywhere else, they're paying more money for the
Yeah.
properties. They're more they cost more in those locations. Like I like there's millions of people that move into this, or not millions, but there's hundreds of thousands of people that move into New York every year. 1% of them, probably not even 1% of them, ever think about buying or owning in the city. Like
Yeah.
they just never would be able to afford it. Um, but that doesn't stop them going to that city
Mm.
and having a job or career in that city for a few years. The majority of them might need like two jobs to actually survive in the city, but like particularly if they're young. But like people don't move there to go and buy. People go there to get the experience, to get the exposure, get get the life experience as well as the career experience.
Yeah.
And they're happy to rent. And I think that's a part of the problem with Dublin. I think Dublin need a functioning rental model, a functioning rental market. For the city to thrive really into the future. And without that functioning rental market, Dublin City is going to go backwards in a lot of ways.
Mm. Well, the way it's going if it keeps going at this rate, yeah, it won't be long now before we see the results.
No.
I'm typically a very positive person, but when it comes to anything government, it's just they just can't be trusted to do. Like, in my opinion, I think if businessmen managed all of the money in our society, I feel like we would have such a much better society than leaving it in the hands of people that go and study politics and now all of a sudden they know how to control a whole country's finances, you know, rather than if you got a finance person to manage the actual finances, it would have, I don't know. I feel like socialism, capitalism, I've been really debating these two things and looking at in term like people that talk about like kind of like it was socialist views and then with capitalistic views. I've never seen a socialist society that has worked. I'm still yet to see it. But most societies are capitalistic and they're all thriving, in my opinion.
Well, yeah, they probably were thriving, but there's been too much interference in them
Mm,
recently. That has kind of stopped them thriving a little bit. There's been too many rules and regulations that have been put on top of the capitalist mindset and the capitalist market. But in terms of Ireland, in terms of the finances, like you could say it's managed badly, but you could also say it's managed really, really well. Like from a financial point of view, like the ministers in the financial department aren't that bad. The NTMA aren't that bad either in terms of how they manage our money. The problem is they're really good at actually collecting huge amounts of rent or huge amounts of taxes.
yeah.
They're very good at balancing the books. It's not the actual. We actually have probably pretty solid financial kind of departments out there from a government standpoint. The problem is then when it gets to other departments, when it gets to healthcare, when it gets to housing, when it gets to education, they're the problem. Like
Mm,
the money is actually there. There's too much money there going
yeah.
into these departments, and it's not been allocated right. Like it's not been spent wisely
Mm,
in a lot of cases, from healthcare to education to housing. Like a huge amount of money in my mind is wasted on the HAP scheme and the HAP system, and
yeah.
going into renting properties rather than actually building and buying them.
Mm,
But that's bad management from the housing department side of thing, and a lot of that does have to do with how Europe actually allows governments to spend money. So in terms of actually how the government generate money and save taxes and actually balance the books as such in terms of their budgets, they actually don't do that bad of a job at that. In terms of like ever since the crash, like before the
mm,
crash, the government were actually doing quite well. They had huge surpluses and they had a huge amount of money. They had a few
mm,
billion stashed away, and that those few billions that were stashed away were actually able to cushion some of the blow from the last crash. And now we're getting into a situation where we're collecting huge amounts of taxes from the corporations, and they are saving that. They're putting some of that away for kind of
mm.
a rainy day fund. So it's not the management of the cash or the taxes that are coming in. It's how it then, once it gets down to the different departments, how it's
Yeah.
spent.
The strategies.
Yeah,
Okay.
yeah.
I get that. Okay. I don't want to take too much more of your time. I really appreciate this show. So to end the episode, I want to go into advice you would give for young people right now to what they can do if they want to try and maybe get into the property market or get some form of financial freedom to where, they can um, have their salary plus they can maybe get some from an investment. What could young people do? A couple of steps that they could do in order to achieve this.
Well, like I wouldn't, I suppose I wouldn't solely maybe focus on like just property if you're young, because sometimes when you're getting into property, it takes a huge amount of capital. And I think the
Mm,
easiest thing to do is like look at two different things. Look at like what you call earned income and kind of received income. So
mm,
like your like earned income would be maybe perhaps what you do on your salary and your hours you spend to get an income in. And then two would be your kind of received income, which would be dividends or rent or something that like you've invested in that gives you money back. And I suppose the goal, let's just say you're young and go, okay, well, all of my income is going to come from the start is earned income. I've no other way about it. It's going to be all earned income. I'm going to have to work for this, but a little bit of this each time goes into something that's going to get me some received income. And when
Mm.
that received income grows and grows, I'm going to keep pushing my earned income up as much as possible, but I'm going to keep saving and putting more and more of this into something that's going to yield back some sort of a return. And then the goal is to, as you get older, is this earned income comes down, or not comes
Hmm.
down, but may continue to go up. But this bit of received income keeps going up and keeps going up as you get older, and eventually it passes it out.
Mm.
So I wouldn't be too worried about like, oh, I want to invest in something that's going to make me millions or the next cryptocurrency or whatever. I just be more focused on, okay, I'm going to grow this as much as I possibly can when I'm young in terms of my earned income, but I'm going to take more and more of this and put it into stuff that gives me received income. And the goal is that your received income will eventually pass out your earned income. And then you don't need your earned income anymore. You can live on your received income.
Okay, that's a really
So
good piece.
that would be, but it takes time. It takes time to do
Yeah,
that. But that's maybe the way you can kind of look at it going, like, I'm going to earn as much as I can to try build that up. Because sometimes these quick or get rich quick schemes and stuff like that can lead you down wrong paths and continuously lead you down wrong paths.
yeah, I would completely agree.
And and
Um,
and, and to be honest with you, the other thing, depending on what field or industry you're in, what I would kind of do is if I was to go back and have more time in terms of YouTube and social media and all that kind of stuff, I
mm,
think attention is going to be very crucial in future years. So you doing this podcast and you trying to grow this podcast and me doing a YouTube, I think ultimately that is kind of trying to grab people's attention. How you monetize that or how you use that in your favor in the future, who knows how that will play out in people's different careers. But I think that is nearly, it's not quite your earned income, but it is building something that can perhaps give you more earned income.
yeah, social capital.
Yeah.
I think that's what they call it in America. Um, that's very interesting. Um, because as we see right now, attention is the new oil. You know,
Yep.
whoever can keep the most attention wins in the end, and that's why all these platforms, massive platforms, are the new oil companies. It's just a different form of a monopoly. They're all trying to monopolize on your attention. I think that's the
That's the
new
way.
thing
Yeah.
now, and
Yeah. It
yeah,
is. Yeah. And you will like, yeah, the new billionaires will be coming from those type of platforms. Yeah.
yeah, it's very interesting. Um, okay, so I
Okay.
think we're
Let you go.
recording. Sorry.
I'll let you go and
Yeah.
have a
So
nice
I
evening.
think that was a great episode. Really appreciate you hopping on today. I'd actually love to do this again, maybe another time. Now that I have you in the contact list, so it's really good. Really appreciate this. Um, and yeah,
Oh,
so
thanks for having me on. Best of luck with the podcast. Yeah.
thank you so much. Um, yeah, I think that'll be it. Thank you
All
a
right.
lot for
Ha-
listening, and have a good evening.
Have a good evening too. Chat to you
Take it
soon.
easy.